Make sure you guys get your 5 stocks from Moomoo. Link down below. All you have to do is deposit at least $100, and you could get up to 5 stocks, each of which could be valued up to $3,500. It's free money, guys. Again, link down below. And now let's break down the market, some stocks, charts, what the heck is going on in Europe, Asia. We got to break down the February jobs report very quickly as well. So sit back, relax, and let's get right into the video. So I'm filming this at about 1 p.m. on the East Coast, and as of now, we have the S&P down 0.8%, the Dow's down 0.6%, we have the Russell down 1.7%, and the Nasdaq is down over 1% as the VIX is up 7%, and we have gold up 1.5% and silver up over 2%. And what we're noticing here on SPY, and let's break down SPY and Triple Q quickly before we talk about the jobs report and what's going on in Europe and Asia in terms of their markets. What we're seeing here on SPY is we're holding above 427, which you guys can see if I zoom in. 427 has been a strong support level over the past couple of trading days. We have 1, 2, 3, 4, 5, 6, including today, trading days where SPY is held above 426, 427. So I have my alert. Well, I have 2 alerts. One at 427, mark is at or below, and one at 445 if SPY ever wants to break out. I mean, if it starts breaking out above 445, we might get a breakout from that point, but by the looks of it, this wants to go lower. Again, all of the indexes are down right now, and I do believe the bottom will fall out if SPY does break under 427, hence why I have my alert at 427. And you guys can see so far today, SPY is respecting that level of support. We sold off in the beginning of the day from about 9 a.m. to, when was that? About 11 a.m. So the first hour and a half, we sold off, and we held right at 427, and that's where we've seen this little relief rally over the past hour and a half, where SPY has actually recovered about 1%. Well, it's gone up about 1%, recovering a lot of that loss, pretty much the entire loss from the beginning of the day when the markets opened. So we'll see if this continues. I'm a bit skeptical. I don't really think this relief rally is the end-all, be-all, that we're going to start breaking out from here. So I'm going to be watching SPY for the rest of the day. And again, if we break under 427, whether that's today, later in the day, at some point next week, that is where we really could start seeing more selling pressure. And for Triple Q, this one is hovering right around 336 to 338, which you guys can see over the past 5-6 trading days, that support has held. And if we do break under, let's say 335 for a round number here. Let me put my alert at 335, mark is at or below. If that point breaks, that is where the bottom could fall out on Triple Q, and this might go down and test the lows from the end of February being around 317. We might not break those lows, but if we break 335, we might go test those lows. So bears are still in charge, guys. Pretty much all of the stocks on my watch list, other than 4 or 5 of them, are red right now. So not the best day whatsoever in the markets today. And we have the European and Asian markets not doing good at all either. The Pan-European index closed down 3.6%, with banks plunging almost 7% to lead losses. And for the week, the benchmark lost 7% and suffered its worst week since March 2020. And obviously the Russia-Ukraine, conflict, the ongoing conflict. We just had a nuclear, power plant bombed, I believe, what was that, last night? So all of this is, it's hurting not only the U.S. markets, but all the markets around the world here. Obviously, again, the European index here went down 7% this week, losing the most since March 2020, and markets in Asia Pacific tumbled as investors continued to monitor the invasion, with Hong Kong's Hang Seng Index and Japan's Nikkei 225 both falling more than 2% to lead losses. And on top of that, we had the Fed jobs report, which, let's be honest, this is kind of getting swept under the rug with everything going on. Nobody's really paying attention to this, but we still had it nonetheless, and non-farm payrolls rose by 678,000 in February, and the unemployment rate fell to 3.8%, and the estimate for this month from Wall Street was about 440,000 non-farm payrolls. added. So that beat the estimate. Again, it came in at 678,000, and they were expecting unemployment to be around 3.9%, and it came in at 3.8%. So jobs report for February, much better than expected, but again, the market is kind of brushing that under the rug, not really paying attention to it, and wages were little changed on the month and up 5.1% for the year, well below the expectations. And that's the crazy thing, guys. That goes to show inflation is hurting the average working American, right? If you only got a 5% wage increase the past year, which that's the average based on this data, 5.1%, you are under what inflation was for the year. What's inflation at? Like 7.5%, and that's the government number. It's probably even more than that. So wages are not doing as well below the expectations. And in terms of the jobs report itself, leisure and hospitality led the job gains, followed by professional and business services and healthcare. So that's a little rundown on the jobs report, some numbers from that, and of course the European and Asian markets. And with that being said, let's take a look at some of these charts that I'm looking at. We have crude oil yet again looking pretty juicy today. Crude oil is up 4.5%. You guys can see here on the 20-day chart, the pullback was clearly bought up. It pulled back from 116 to about 106, 107. Now again, like I said, we're above 110. We're trading at 112, well above the moving averages on this 20-day chart. So it looks like some cup and handle action is forming here on CL on the hourly charts. I would not be surprised if this were to go back 115, maybe even to break above those highs that we recently saw. So crude oil is looking fantastic here, very bullish. Occidental Petroleum, just when you thought this thing was going to cool off, it's ripping again. Oxy's up 11% today, and that's after being up from the past couple of days. Look, just the past 1, 2, 3, 4 trading days, Occidental Petroleum was up 24% in the past couple of days, and now it's up another 11%. So talk about a ridiculously bullish move on Oxy here, and I wouldn't touch it necessarily at these levels. You're playing with fire if you're buying Occidental Petroleum here, no pun intended, because you gas, fire, if you guys didn't get the joke there. But yeah, Oxy's very overbought. I'll be the first to tell you that, and I thought it was overbought literally at $48 before this 11% push. Now it's definitely overbought, so I'd be careful with it. You're playing with fire here if you're buying it, and I'm going to be looking for a pullback, and that's the truth with all of these energy oil stocks. I want to buy them when we see a pullback. I want to add more on a pullback, right? So keep your eyes on oil, energy stocks in general. We also have the gold miners today doing very, very well. I mentioned this one on my Patreon video this morning, and it's up even more from that point. And if you guys do want to check out my Patreon, that's linked down below. If you want to join it, you get all my buy, sells, call outs, what I'm doing in real time, more access to me throughout the day, Discord, morning videos, all that good stuff. It's linked down below. Check it out if you want. We mentioned GDX in that video, and it's breaking out. GDX now took out 35.50. It's up over 3% on the day. And at this point, there's really no resistance level until $40 a share, which is about $3 higher from where we are now. $40 being the resistance from back in May. So I truly believe GDX, that's where it's headed over the next couple of weeks / months here, especially as we're seeing all this fear around Russia, Ukraine, inflation, the Fed doing what it's doing as well to try and fight inflation, which it's probably going to, lose that battle unless they really start hiking up rates more aggressively. So I think this environment that we're in is good for gold, thus being good for the gold miner stocks who literally mine the gold out of the ground. I mean, GDX is great. We also have NEM, which is Newmont. Let me show you guys this one, Newmont Corporation. This is up over 4% today, another gold miner stock, and you might be looking at the yearly chart, or the 4-hour rather, and you might be saying, hey, it's a little bit overbought, which it is, but we've seen these stocks get overbought, pull back a little bit, and then start ripping up even more. So I do believe we will see a bit of a pullback, but ultimately, these are very bullish. And if we take out, especially on Newmont here, if we take out 75, which I believe is the all-time high, let me double check that. Yeah, if we take 75 out, we're going to be in uncharted territory. This might be ripping 80, 85, especially in this environment, again, where I just mentioned gold, inflation, uncertainty, fears. It's a safe haven. I think these stocks are going to do well. NEM is one of them, and we also have GOLD, which is Barrick Gold Corporation. This is up over 3%. This recently just took out 2250, big resistance. Now we're well on our way to fill the gap to about $25, $25.50, which if you guys take a look on this 3-year chart, that was resistance back in May. So I fully expect Barrick Gold to hit 25.50, and quite honestly, I think it's going to break that point, and we might end up filling the gap over time to $30, $31, which was the high from August 2020. So these stocks are gearing up a ton to the upside, and if I had to pick Newmont or Barrick, I'd probably go with Barrick right here because it has a little bit more upside, in my opinion. It's a little bit less overbought, and there is a bit more runway, like I said. So Barrick Gold is looking great, and don't get me wrong, Newmont's great as well. If it breaks 75, even more upside there. And another one that I'm looking at before we wrap the video up is Broadcom, which reported yesterday. If you guys caught my video from yesterday, you saw us cover that stock. They reported they got some, outperform, overweight ratings. And let me see here. I think they did double beat. They did 839 EPS versus 808 estimated, 7.71 billion versus 7.6 billion for revenue. So nice double beat, some nice upgrades from analysts. The stock's up almost 5% today. And what we're noticing is it's trying to break out of the wedge. It's already above these moving averages on the 4-hour chart. And if we take out the highs from, let's say, the middle of February being around 610, 615, if that's where we end up breaking into, or rather above, this could shoot mid 600s, in my opinion, no doubt about it. So I just put my alert at 615. Watch for the break there on AVGO. And yeah, that's pretty much it. Hope you all enjoyed the video, found some value in it. If you did, make sure to hit the like button, subscribe. Let me know your thoughts in the comments. Join my Patreon if you want all my buy, sells, call outs, morning update videos. If you kind of want an idea of what I'm doing in these markets, what I'm buying, what option moves I'm making, that's on Patreon, link down below, or you guys can go to StockSurfest.com/Patreon. Make sure to also get your 5 free stocks from Moomoo. Use my link, deposit at least $100, which you can then take out when you get your stocks, and you get your 5 stocks valued up to 5 stocks valued up to $3,500. Again, use that link down below, deposit at least $100. It's free money, guys. I'll catch you all in the next video. Peace out.